Mario, welcome. Good to have you with us as always. Great to see you.
You too, Tyler, and you too, Kelly. A great day to be here.
Looking forward to the conversation. You say that there are 3 A's that you have your eye on right now. Good. Thanks for the mnemonic device, or whatever that word is. Automobiles, aero defense, and agriculture. Let's start with agriculture. Why are you focusing there right now?
Well, we look at the cash flow of the American farmer. Beans, wheat, corn, that is commodities, plus livestock. Significant opportunity to use that cash flow to buy equipment. And the equipment is 100% write-off under the current rules. So, you know, I'm not wearing this because it's St. Patrick's Day, Tyler. I'm wearing it because I like John Deere, but I also am recommending Case New Holland, which is an equipment company with about 1.3 billion shares selling at $15. So we look at how much will the farmer spend. Then the ecosystem includes the fertilizer, the wheat, the herbicides, the pesticides, and so on. And to the degree that we need to encourage the American farmer to continue to produce, go fence to fence on his plantings, that's very important to fight inflation, which is the enemy number one. This button is not for the it's not for March Madness. It is for 8 years ago, 1974. Whip inflation now, and that is got to be along with the other dynamics of invasion and so on, and interest rates are one of the dynamics that center our orchestra. So that's what we think about. So that's the agricultural ag system. The second system is aerospace and defense. The amount of money that is being put incrementally in the budgets by NATO, by American companies, and what we will have to do to anticipate what may happen in the future as opposed to look through the rearview mirror as we've been doing. And in that regard, we have companies that we own, our clients own, Aerojet, the stock's around 38. They are a leader in the hypersonic dynamics that we have to worry about. The Maginot Line in the 1930s, Tyler, was similar to our Minuteman missiles of today. We've got to replenish that. Then in addition to that, we have companies like Textron that are doing a very good job of what they're doing. And then some smaller companies where we own called the Common and so on. But then the third part was the auto sector, automotive. We at the car dealership level have 1 million cars approximately in the United States, 2 million below what it normally is at this time of year. So we have a long runway to build production up over the next couple of years. And that's an important part of, in quotes, the consumer sector in durables. The second part is the used car prices are up sharply, which means that the loans that we have been taking out, 72 months, 82 months, that's going to be easily repaid. Third part is that the fleets, the rentals, government, and others that represent normally 25 to 30% of the car market, they're not there. So, Tyler, we have a very low outlook over the next couple of years. So vendors that sell stuff for EVs, vendors that sell products that are US-based or North American-based, those are kind of intriguing to us. And then in addition to that, I have to wear my Napa hat. National Automobile Parts, 140 million shares. The stock's about 125 down in Atlanta, Georgia. They've got a little hiccup in the European operation, but on balance, you're going to see earnings surge. And more importantly, Tyler, when inflation picks up, even though real GDP may slow down, the basket of auto parts prices going up allows them to flow through more or less with a constant gross margin, but SG&A don't rise as much, so earnings have great flexibility, well-managed companies. So those are the things we think about, Dana and others like that.
And I know you like companies with pricing power. We'll come back to that, and I assume most of these that you're talking about have that in your estimation. Let's go back just 2 steps to the agricultural space and fertilizer. Mosaic is one. There are a lot of others of them. But a lot of the inputs that go into those fertilizers come out of Russia, don't they? In other words, nitrogen,
you got
potash, and other things.
Potash, and urea, and the ammonia is made a certain way. But just think about this, Tyler. Let's assume you and I were wheat farmers in Kansas. We planted winter wheat in the fall and we're harvesting in the spring. We got all our inputs in.
Right.
We assumed we'd get $6 a bushel. We're going to get $11. You know, so there are certain, while we have to get an incremental supplies going forward, we hope that we And we will expect that we have some of those. And so the phosphate out of the potash out of what's that great state, Florida, is an example of where we're self-contained. And American ingenuity will figure it out. And the American farmer is very smart and very hardworking. And God bless the American farmer, so they'll figure it out. So going back to, this button, which is to me center row orchestra for multiples, inflation and interest rates, what's the present value of the future stream of earnings? Are we moving away from looking at stocks based on a multiple of revenues or stocks based on a multiple of EBITDA minus CapEx? And that's the tug of war that's been going on in the stock market, minus the mechanics of the market.
Are you overall bullish on the stock market, given that the last time people were wearing that button, it didn't have such a great decade?
We allowed inflation to run out. Kelly, it's thinking about in the morning when you brush your teeth, take that toothpaste out. You can't put it back in. Once inflation gets out and runs uncontrolled, it's like that. Carl Alter-Perl, one of the directors of our company, who was the head of the Bundesbank, coined that phrase. Yes, we are concerned. So companies that have pricing power, companies that have cash flow, companies that put de minimis incremental capex in, where the products are somewhat inelastic. A classic example are the broadcasters. Advertisers, that is the consumer products companies, raise price. They have certain demand. They assign a certain multiple of their budget. They decide whether it goes digital, linear. And basically, these companies have very little capex. So that's what we look for. As far as the stock market is concerned, earnings are a function of revenues. Revenues are a function of, let's assume, constant share, constant market, constant volume. How much can they raise price? And then, so if I'm up 4% with real revenues, real GDP, but if I'm up 9% with 2% real, 7% inflation, I am a surrogate for you to earn a return in nominal terms to fight and preserve your purchasing power as an investor. And so that's what I see.
Sure. So you basically, we can weather this environment, but, just a little bit cautiously, and it'll change the companies that you want to be exposed to. I know that you say you're watching mortgages and housing here. And what does that mean? And we have seen housing starts just this morning, I think at about a 15-year high, but prices are already sky high. Half the population wants to see the market slow. The other half owns houses and is wondering about what that would mean for them.
Well, there's no question. We agree there's a shortage of housing. If I buy a house for $400,000, I put 10% down. I'm borrowing $360,000, Kelly, and it goes up 1%. That's $3,600. That's $200 a month incremental interest expense. So that at the margin becomes a challenge. So what do? Do we do manufactured housing? You get a double wide that CAFCO makes for $80,000 or $100,000, and you get 2,400 square feet. So there are alternatives, and we have to focus on that. We have to focus on used car pricing. We have to focus on student loans. There are a lot of things, but the most important thing is that we as a planet need renewable energy, wind, solar, cybersecurity, storage, transmission. But we also have to be practical. We have to unleash the power of those that can produce energy short-term, that is nat gas, and deliver it. And then we have to allow oil to come in. So we have some incomplete, I am not using the word incompetent, but incomplete policy dynamics taking place. And as a result of that, let's focus on that the way we did when other crises occurred in this country, and we will do it.
Do you talk to me a little bit about the automobile market? Because I've been in and out of it a couple of times over the past 6 months. And a lot of the dealers are saying, we are having the best profit years we have ever had because we're able to price above MSRP. The demand is there. The inventory is low. Do you see that sort of inversion in pricing continuing? Or do you see that the chip shortage is going to be solved and prices will come back down, et cetera?
Well, the chip problem requires that American chip manufacturers locate, and diversify the sources.
Correct.
And in addition to that, other dynamics. But from the point of view, we're hearing too many stories about profiteering by car dealers because somebody wants that Audi XYZ 50,000 above MSRP. That has to change. On the other side, because I bought a used car, or I have a car and it's a used car and it's now 5.5, 6 years old, not only am I going to replace my batteries, but my brakes, but I'm also going to be willing to do it through my professional mechanic. So to do it for me, which is important to Genuine Parts, also important for O'Reilly, those dynamics are in place in advance. And then you got the do-it-yourself market. So go back. I don't think there's no question that a company that is well-run like AutoNation, they've taken the number of shares outstanding from 100 down to 61 million. The stock is 110. Mike Jackson's retiring. He's been on your shows for a long time. Yes, they're going to make less, or they're going to market more, and they're going to give a bigger amount of promotions and discount. But the real challenge, Tyler, is that people that go to work need a car, and the inner city needs a personal transportation as they moved out of some of those inner cities. We have to have lower priced cars, and I don't want the Chinese to come in with a $14,000 car, which they have available. I want American companies also to produce a balance. And so that is what will happen within 18 months. The point is, you have a long runway. You can't just sell 13 million cars. On a global basis, this year, we're probably in the 80 million plus car production and sales. And that's probably will go up. And yes, we're going to put in EVs, but you can't buy a $60,000 or an $80,000 EV and live in the South Bronx in an apartment building because you don't have the EV, and technically it's too expensive. So that's work in progress. We will resolve that problem. We will have a great opportunity for the OEs, but also the aftermarket suppliers.
All right, Mario.
And the car dealers.
Always great to see you. Mario Gabelli, thank you for your time today.